Sarah, this stock is also rocketing higher, up more than 10% now in extended hours, because this was a much better quarter than the street was expecting. They were expecting some big losses, but revenue and losses actually beating estimates. Revenue at $956 million versus $893 million expected. That's growth of more than 20% year over year. Net loss of just under $400 million versus more than $1 billion in the quarter last year as they were preparing for their IPO. Adjusted EBITDA loss was $85 million, an improvement of about 60% year over year. The street was expecting more than double that number. Cash position. This is important because we know that the ride-sharing companies are in for a world of pain. That actually hasn't changed significantly from the end of 2019. The company has $2.7 billion in cash and cash equivalents as of the end of the first quarter. CEO Logan Green in the release saying that Lyft can weather this crisis, and it is responding with an aggressive cost reduction plan. That, of course, includes the layoffs that we've been talking about last week. Lyft announcing that it was cutting about 17% of its workforce. All in all, guys, I think this shows that Lyft was on track for a pretty good quarter as ride-sharing starts to show profitability. But here, of course, the global pandemic hit and Lyft is now in crisis mode. That does show up when you dig into the numbers a little bit. Active riders, for instance, that number grew just 3%. People abruptly stopped taking rides closer to the end of the quarter and as lockdowns were put in place. So we will see a lot of pain in the current quarter. And I don't think that you should extrapolate Uber from this, because Uber is global and it has seen a slowdown in its markets far sooner than Lyft has. Remember that Lyft just operates in North America. So it will be key to hear what is said on the call and what they're seeing in the last month, guys.